Hey everybody, welcome to Hope Through Housing's latest webinar. Today we're going to be talking about building a financial foundation, and we have a couple of associates with us from Comerica Bank. And know this is a time right now where tough time financially for so many, and maybe some of you watching as well, knowing that in the midst of COVID, so many have had hours cut back, job loss, just other financial struggles, during this time. And what I will say is, we're going to talk about today, fortunately, are, timeless tips for you that maybe they're extra relevant right now during COVID, but really, really good information for any time. And so I want to introduce a couple of folks that we have that you hopefully see on your screen. First of all, my name is Greg Bradbart. I'm the president of the Hope Through Housing Foundation, and we're happy to be able to bring some of these resources to you. We also have Dixie Torres. Dixie, do you want to wave? So Dixie is our program manager at the Hope Through Housing Foundation. And then we also have David Betancourt, and David works with Comerica Bank. I'm going to say in his community relations department, and I think broader than that. And David, welcome, and thanks for helping to set this up.
Thank you, Greg, and thank you everybody who's joining us today. My name is David Betancourt. Like Greg said, I'm the External Affairs Market Manager for the Southern California region. And really what we want to do, most importantly, is to deliver on our promise of reinvesting in the communities we serve. So Comerica has done a fantastic job. We've committed over $8 million into COVID-19 relief efforts, and also with our volunteer services, making sure that we're getting out there and providing additional value to our communities. So really grateful for partners like the Hope Through Housing Foundation and Greg and Dixie and their team and the great work that they do. So Greg, thank you so much for having us.
Absolutely. Yeah, thanks, David. And, again, I'll share, today we get to hear from Comerica Bank. They are a great partner with us, but this is not, it's not a commercial for Comerica. It's really about banking and good banking principles. We work with a ton of great banks out there. And Raymond today is going to just educate us on some good, just financial principles. So want to introduce Raymond in just a minute. I will say, first of all, for our attendees on the line, if you have any questions or any comments, you can type those into the chat box, and Dixie and I will be watching for those, and can ask Raymond or David about those afterwards, and I'll also be making some notes so I can do that as well. But with that, I want to introduce Raymond Haynes, and Raymond's a banker specializing in business banking and credit education. He has 7 years of financial industry experience. He's a Los Angeles native with a passion for strengthening the financial savvy of the communities and clients he serves. And today he's joining us really for an introduction to financial literacy with topics for conversation around building a financial foundation. So Raymond, how you doing today?
I'm great. Thank you for asking. How are you doing, Greg?
I'm doing well. Thank you. So, hey, I know you're going to talk to us about financial foundations. I'll turn it over to you now, and just let Dixie know when you want those slides up, and she'll drive those for you.
Yeah, thanks so much. Like you said, the savvy of my clients is probably the most important thing for me. I like my customers to be well informed about what they're doing, what they're planning for, how they do it, and also knowing and utilizing me as a resource continuously throughout these plans. So I'm excited to be here. I'm excited to do this webinar. I'm excited for everybody who's here present live and everybody who's watching this recorded. We're going to cover a lot of important basic information about what it really means to be a financially savvy adult, let's say. Very basic stuff. We're going over checking accounts, savings accounts, and just general information about what it is to start banking. I'm excited. So we can go ahead and get the presentation going. Dixie, if you want to pull up my first slide. I thought it was important to highlight Comerica. You did say that it is not a commercial for Comerica, obviously. Comerica is the bank that I work for, and a big reason that I love working here is because of the community outreach that we do. Comerica is dedicated and committed to assisting not only the communities here in Southern California where I work, but in every market that we cover. I worked in the San Jose, North California district before, and same situation is here. We're always out there. We're always trying to make sure that customers know who we are and what it is to be a bank and how to, care for people. So community outreach is a big part of what I like to do at Comerica. And, I just wanted to definitely highlight that about us before I got everything started. Obviously, thank you to David Betancourt for setting this up. Like he was mentioned earlier, this is a very important department, I think, and I look forward to getting the ball rolling with the rest of this presentation. So we can go on to our next slide. Awesome. So this is just kind of going over what we are going to be covering today. Like I said, we're going to go over checking accounts. So we're going to be learning about the features, the benefits, the functions, and how to choose a bank account. There's different types of accounts for everybody, from college checking accounts to teen checking accounts to just entry-level checking accounts. We're going to be going over all of that. Savings accounts as well. So same thing, there's different types of savings accounts that are available to us at all times. They all earn different kinds of interest. They all carry different responsibilities. So we're going to be going over that. We're going to be creating a budget as well, or discussing tips on how to create a budget. I think that the biggest thing about creating a budget, or the hardest part, if you will, is actually deciding to create it. So just tips and strategies on how to go ahead and get the ball rolling for yourself. And then last but not least, we're going to be going over modern banking. Obviously, like you mentioned, COVID has changed a lot of our everyday lives, and a lot of banks are keeping up with the demand for availability, and that's not always possible in person, especially now. So going over mobile and online banking is, I think, something very important, especially for present times and moving forward in the future. I think it's a great way for you to manage your banking without having to necessarily visit an office. All right, so without any ado, let's go ahead and move on to checking accounts. Thank you, Dixie. Okay, so what can a checking account do for me, right? Checking accounts have a bunch of different features. I think the most important is obviously having access to your cash. Access being, how can I use it? How can I spend it? Am I able to go online? Easy access to cash when you need it is available through debit cards, through checks, through digital wallets, through web banking payments methods, and of course, obviously just online. Having easy access to your cash through a checking account is important, because savings accounts are not only for saving personally, but they're also regulated by the Federal Reserve. So savings accounts don't have the transaction availability that checking accounts do. So basically, you can get your cash when you need it at any time. You can make payments with checks, debit cards, or through digital wallets. And then there's added protection from fraud and theft. I think that this is a very important part of banking for most customers that I meet for the first time. I think that security and making sure that their money being safe is something that is critical, especially when new to banking or new to financial services. Your funds are protected by the FDIC, which is the Federal Deposit Insurance Corporation. They regulate banks and they protect funds per account up to $250,000. This money is protected from fraud, from any loss, basically just having access to your funds and making sure that it's you who's utilizing them. That's what banks are there to protect you for. I'm going to different protection methods when we go into our mobile banking, but the insurance is the most important part of the checking account. Aside from that, we use signature documents, we use PIN numbers, we use different security methods that can be added to your checking accounts so that you can protect them, to be notified about the activity, and to also make sure that you're aware of where your money is going and when it's coming in as well. Lastly, for a checking account, flexibility is a big thing. You can bank in person, you can come into the banking centers now. Obviously with COVID, we're on appointment schedules and most banks are, so it's important for you to call your local banks before you visit to make sure that they can service you. There's also online banking, and there's also mobile device banking. So these are all methods for you to access your checking account when you're not able to do it online, or when you don't want to do it online or through a debit card. Direct deposit is probably the easiest fee waiver for most banks. Nationally, most banks have an account that offers free banking with direct deposit. Mind you, direct deposit can come in from work, can come in from benefits, can come in from Social Security, from the VA, you name it. Different people make their money or get their money from different sources. And if you're able to get your money direct deposited into a checking account, that's available immediately. A A lot of times when you're a new employee or you're receiving checks from your employer, you have to either go cash your check or find a way to make it available into your account. Direct deposit saves you time and it makes it available immediately, oftentimes the evening before. Looking into direct deposit and what is available to you from your employer is probably a good first step to get going before you decide to get a checking account, just to make sure that you're going to be able to meet the requirements of having access. If not, then visiting your local bank is going to be an important part of finding out what types of different fees are associated with having a checking account when direct deposit is not available. And then last but not least, we're going to be able to track your spending. The reason this is important is because, like I said, we're going to be going a budget, and tracking your spending is probably one of the most important things from your day-to-day that should be a part of your daily routine, if you will. Making sure that you are monitoring your account online, making sure that you are balancing a checkbook, or making sure that you are consistently just checking your spending or consistently keeping track of where your money is going is a very important part of banking. And it's made very easy with checking accounts because of the web banking that is available. The web banking opens up a lot of different tools that are available at home, which basically almost makes it possible for you to bank for yourself the way that I would be able to service you in person. You can do all the changes and updates that you need to online. And a lot of times you can have demonstrations done at the banking center so that you can familiarize yourself more with that. All right, so that's checking accounts. Checking accounts, just in quick summary, are for spending, for direct deposit, for bills, for debit card utilization, mobile payments, mobile wallets, digital banking, and basically the most entry and important account to have when you're first opening an account, in my opinion. All right, so let's move on to savings. Okay, so savings accounts are a little bit different in the sense that they are literally designed to save. This is another thing that is regulated by the Federal Reserve. So all banks must comply with savings accounts requirements and limitations. So saving is money that you put aside for safekeeping. You may be saving for a specific purpose, or you could be building up an emergency fund. Understanding the various types of accounts available to you and the way these accounts earn interest is one great way to increase savings even further. So understanding your savings options, right? A typical savings account allows you to deposit and withdraw money, but there are limits on how many monthly withdrawals you can make. At Comerica, for example, we are limited to 6. It's my understanding that most banks do follow the 6 withdrawal limit per month because this is a federal guideline that we must follow. So depending on the savings account that you choose, your financial institution may require you to maintain a minimum balance. That's because savings accounts also will come in tiers. Savings accounts can obviously be a good way for you to set goals, but when you reach those goals and then you decide to reach greater goals or increase the amount of money that you decide to save, the bank keeps up with you in a way where you are able to generate more interest based on the types of deposits that you keep. So as your money grows, you can be able to change the types of accounts and the types of benefits that you receive or the types of deposits that you keep. And this is something that would be important conversation to have with your banker in person because different banks offer different types of products and different interest rates as well. A typical savings account is usually maintained with a checking account at most banks. I've done my research, and for the most part, I've noticed that the typical formula for banks is a checking account with a debit card, online banking, and some kind of savings product attached. Typically, when you have a checking account with a bank, and like I mentioned before, direct deposit waives these fees most of the time. You can also have a savings account. So it's a good way to start. This is like the next step in banking. Once you've already familiarized yourself with a debit card, you've already become a master at web banking. You already know what's going on as far as like spending your money goes. You know, we also have goals, aspirations. Maybe you want to buy a new car or move into a new place, get a house. Savings is that step. And the good thing about savings accounts as well is that oftentimes you can have multiple savings accounts for different things. Something for like a vacation versus having a savings specifically targeted for your home. And these are conversations, again, that you can have with your banker so that you can go over the different types of products. Now, savings accounts are useful for putting money aside for wants, emergencies, or a rainy day because they have higher interest rates than checking accounts. Make sure you set short and long-term goals for yourself so that you know what you're saving towards. I think that that's important, and we're going to go over that when we start speaking about creating a budget. Now, interest is key with a savings account. You take on the role of the lender, and the financial institution becomes the borrower. The higher interest rate and the longer the time period you leave your money in the account, the more compound interest you earn. And then this is what opens up that conversation for other different types of products. A CD or timed deposit account is a type of account that is limited to the withdrawals because you lock the money in. You usually get a higher interest rate for locking your money into the bank. However, you don't have access. This can be for as short as 3 months, or it could be as long as years. You set that term up at the beginning of account opening, and then you are given whatever rate you're going to be given for the life of the savings account. Once these accounts mature, then you're able to access your funds, and oftentimes people save more money because of the interest that they save on keeping their money put away, basically. Okay, so we'll go on to our next slide, please. Okay, so now let's talk about a budget. So now that you've got a checking account and you know where your money is spending or being spent, and you also have a savings account and you are saving for a goal, I think that the big thing here is to then structure a plan for yourself and create exactly what it is that you need, right? So why should I have a budget? I think the two major parts of creating a budget, for me personally at least, is it reveals waste. Creating a budget identifies your budget busters, or the small amounts you spend day to day without thinking about it. I'm talking coffee, the occasional snack, 7-Eleven run. Sometimes people don't even notice how often they're filling in their gas tank. So I think that just paying attention to how often you're spending the daily types of transactions and where it is that you're using your debit card daily to really like keep track of those little transactions. Adding them up daily can sometimes reveal transactions that maybe you're avoiding, like, you know, let's just say larger purchases because of the fear of spending that money. But then it turns out you're actually already spending that money in small transactions. So revealing the waste is probably a good way to just kind of manage the way that you decide to spend your money daily. And then the next one, the next reason is the direction it provides. So it really gives you a big picture of what your finances looks like, and it really helps you set the priorities for spending, right? So when we're eliminating busters, everybody's different. Everybody's spending their money in different places. Either you're eating out or you just have unhealthy habits or you're smoking cigarettes. That money can go to different financial goals. So when you set up your savings accounts and you know what it is that you are saving for, then that can be the new target. That should be the new target, because that's going to not only create success in your life, that's also going to create bigger goals. It's the only thing promised in life, I think, a growth. If you're out here every day and you're just focusing on yourself and you are taking care of your life in a way that's positively going to benefit you, the growth is, you know, I can't even think of the word. It's so big. It's huge, right? So knowing your income and your expenses, right? So total income minus your total expenses should be a positive number. If it's not, then you need to adjust how much you spend on your wants. So then the real question becomes, what is it that you need and what is it that you want? Oftentimes, I think that the mind can get very distracted in wants and we lose focus on what it is that we need. Things that are essential, like home or a way to get around, our kids' futures, our family's futures, our health, things that are critical and important. These are things that we should be prepared for and that we should be ready for. And sometimes, unfortunately, that means that you need to have resources that are financial to assist you with these things. And I feel like knowing, creating a positive experience in your financial spending, in your budgeting is important, because it's the only way that we're going to move forward. And a good way to calculate that is Comerica uses the 50-30-20 rule. And the recommendation is that 50% of your income should be for your needs. Think housing, think, transportation, education, and health. 30% of your income should be for your wants, clothing, vacations, trips, eating out, your significant other, what have you. And 20% should be for savings or debts. So this is making sure that you're taking care of any student loans that you may have, any credit card debt that you may have. If you have an auto loan payment, making sure that that's being taken care of, but also making sure that you're using money that's going into your savings account. So even though the 50-30-20 rule is a good one, this can definitely be adjusted to fit your budget. And then this can really only be done by you really like targeting those budget busters and then creating a direction for yourself. Once you have a savings goal or a savings plan, I think that that's probably the best way to get the ball rolling with where it is that you want to take your day.
없어?
나는 구경도 못해서 뭔지도 모르지.
그게 어디다 놔뒀다는 거야 도대체?
Right. Let's go on to our next slide. Okay, so this is probably my most important part of banking, I think, right now. This is mobile. The reason that I say it's the most important is because it literally brings mobile banking to your hands. I wake up in the morning and the first thing that I do is check my bank account. I'm looking to make sure that any transactions that are coming out automatically, like phone payments, insurance payments, or auto loan payments, that all of that is taken care of. I also have transfers set up. Transfers are something that you can set up on your own for goals. These can be triggered automatically. These can be triggered weekly. These can be set up in any, basically, I just check the activity every morning when I wake up. And this is important, I think, because everybody doesn't have access to the bank all day long. With shortened hours, especially with COVID as well, the amount of time that we can spend at the bank is really limited. And having web banking is very important because, like I said, it brings it to your hands and it is available for free. So besides the accessibility, the important thing with mobile banking is that you really can take charge of your account fully. You're able to set up payments. You're able to make address changes for yourself, update your contact information, do transfers. You can do bank-to-bank transfers. You can create savings goals for yourselves. There's spending trackers on there. There's budget tools that assist you that literally break down your spending just by the algorithm in the application, and it literally breaks down where your money is going for you into different categories. You can basically have a snapshot of everything that you do. And the importance of this too is that not only can you see everything, you can also make deposits into your account. We're accepting mobile deposits. We're adding debit cards to your phone. You're able to not have to carry a wallet necessarily when you're out anymore because everybody has their phone on them at all times. And this is an added method of convenience. Sometimes you just forget your stuff and it's on your phone. It's facial recognized. It's thumbprint recognized. It's secure. It is encrypted. And people are increasingly using online and mobile banking to monitor their account activity, pay bills, or even making purchases like their coffee or their daily lunch. Explore how to use online and mobile banking securely to improve your financial habits and simplify your daily financial tasks. My first recommendation always when I set up a new account is for my clients to give themselves maybe an hour or 45 minutes to literally just play with the web banking and find out what the different tools are, because I could literally go on for about half an hour talking about the different things that are available online. But once you have your checking account set up, once you have your web banking enrolled, I think it's important to familiarize yourself with the tools that are available to you because, like I said, they're at your hands. You have full control over your full financial life, basically. And all of the banking that you do, all of the banking that I personally do, when I'm working with clients one-on-one, this is from big stuff. Luckily now, a lot of my clients are more than able to and more than happy to take care of everything that it is that they need on their daily banking on their own. And that's amazing to me because it frees up the opportunity for me to do things like this even, where I'm able to further share that information and further make the community around me more informed. Yeah, I'm pretty much finished. This wraps me up for mobile and online banking and checking, savings, and budget creating.
Thank you, Raymond. Appreciate that. And I took some notes as you were talking. A couple of things that you talked about. First was the safety of checking accounts that some people might not know. You talked about the FDIC limits, which is great. I mean, you said that it's protected up to $250,000. So for most of us, that's not an issue. But to know that our money is protected in that way, and I believe, if that was an issue for him, actually you can have multiple bank accounts with different institutions and have that protection level at each of those institutions. Is that right?
Yeah, That's right. And actually, it doesn't even have to be at different financial institutions. This is per account. So technically, if you were to have two different checking accounts, each one is insured for 250,000.
Okay, so that's good
But
information.
even smaller than that, because 250,000 is a lot of money. But at smaller scale, your money is protected because with web banking, you can set up things like notifications on your phone. So literally every time that you swipe your debit card, you can get an alert on your phone that says, hey, you just spent $2. Hey, you just spent $10, whatever it may be. So your money is protected in a way that is unheard of from before. Back in the day, people banking, everything was all on paper. Now it's instant. You come into the bank, you do your transaction, it's viewable on your phone. You can see that a deposit was made. You can see that a withdrawal was done. You can set alerts for all of this stuff as well, which is exciting because at any given moment, you basically, like I said, have access to your account, especially if you're using web banking too. If you're using the mobile banking apps available at different financial institutions, this is alerts that you could set for literally anything you can think of.
Yeah, that's great. Yeah, and then the other thing you mentioned was checking it on a regular basis. You said you should check it every morning. I don't know that I check it daily, but just that advice of making sure that you're watching, to make sure that the transactions, are accurate, right? And that they're yours as well. Absolutely good advice, because I think, there's some people who put it on autopilot, and as long as, when they swipe that debit card, there's still money there, it's all good. But, making sure that your account hasn't been compromised in some way or misused. So, one of the questions I had for you was debit cards versus credit cards. Can you tell us quickly, are there pros and cons, one side or the other?
Yeah. Okay. So I didn't really get to discuss credit, unfortunately, because I figured that would kind of push you into a different form of banking. Credit is basically a credit card, let's say, is basically using money from a bank. The way that it works is it's a revolving line. So you're qualified for X amount of dollars, and that money is available to you for you so long as you're staying within that budget and limit, so long as you're making your payments, and so long as you're keeping a healthy relationship with your bank. So between better or worse between a debit card and a credit card is, at the end of the day, the debit card is your own cash. It's your own money. The credit card is money that you are borrowing. So that is the biggest difference. The second thing is that you need to keep in mind that when you're using your own debit card, obviously, you're just deducting from a sum that's available. With a credit card, you're adding to a debt that is then going to be owed. The way that credit cards have made themselves more of a utilized form of banking is that they offer rewards oftentimes. So these rewards can come in forms of cash, in points, in forms of airline miles, in forms of account credit, you name it. Different companies offer different products. So at the end of the day, I think that it is very important to use both. And I think that when you're using credit and when you are deciding on a credit card, the most important thing is finding out what it's going to be costing you. There is costs, because many credit cards nowadays are free, but there is credit cards that are offered at a fee that offer extended features, anything from concierge service to having front of the line access to, or basically, I can't say whether one is better or worse. I think that the important part is.
So I need to send the email to Floyd first to confirm that.
We're having a little trouble hearing you with some of the background noise.
It's okay. Yeah, I think that the most important part about credit is being informed and knowing that you are using credit. I think that times you said that we are in overdrive, or we just kind of go into we're not necessarily thinking about it.
What do you mean, the after phone?
I think that that's one that you definitely do want to watch as because those budget busters show credit cards pretty quickly, and that interest rate can go up pretty fast as well.
Okay.
No, it's not about better or worse. I think it's
just
if you're going to be using a credit card, my advice is for you to pay it off whenever possible, or keep the balances under 30%.
Yeah, and most recommendations I've seen for those who are starting out, just beginning to build kind of their financial footing, would be
got it.
To work off of a cash basis as much as possible, and using debit card initially, to kind of, get used to that, without building up the credit, and like you said, actually, driving up debt.
All right, thank you so much, Juan.
And
Yeah, and then you also
definitely,
talked about, setting short and long-term goals, which I think is really important. And the budget, we talk a lot about budgets around here. So important tracking, what we're spending, what our income looks like, making sure we're balancing those. And I really appreciate you pointing out budget busters, right? Those things, what do we do on a regular basis that, might not seem like much money, but you add it up over the course of a month and you go, wow, if I didn't do that, I'd have another $50 available. But doesn't seem like a big deal in the moment. So
right.
yeah, that makes a lot of sense.
Yeah, and I mean, I think that, everybody's different. For me, it's coffee, for instance. I will buy a coffee for myself every other day. And, it doesn't really seem like a big deal, $3, $4. But you're right, when you do add it up at the end of the month, I can get myself an espresso machine if I stopped buying my coffee daily. You know what I mean? So I feel like it's just kind of about prioritizing what it is that you want and you need, and then really deciding where the priority of your wants is after your needs. Because I think that, making sure that you're taking care of yourself in a way where you're going to be living a healthy, positive life is critical. And then going into all those little extra things.
Yeah, we work with a lot of residents who sometimes, feel like, hey, look, all the income that comes in, I have to spend on my needs. And when we sit down and build a budget, find, hey, there are little spending decisions like that can be changed. And sometimes residents who never thought they could begin to save realize, hey, look, with some goals and some intentionality, can start to save $25, $50, $100 a month and put that away and start to see that add up, and beginning just to build a first-time emergency savings fund, which is so important. So, yeah, that's
Definitely.
great.
I feel like the budget busters, it can work like in reverse. I feel like one of the things I mentioned through the online banking was like transfers. You can have transfers set up for daily. So an example would be, let's say you are buying coffee every day, right? And you decide that you're just going to stop that. Well, not only am I going to stop that, I'm also going to set up a transfer from my checking into my savings account that's daily. That daily transfer is only going to be $6, but I'm going to do it for a month. At the end of the month, if you're actually saving $6, and let's just say Monday through Friday, you literally just saved yourself $120 just with $6 transfers Monday through Friday. This is money that you may, in theory, already be spending $5 on snacks, on something to drink, on you name it. And setting up transfers or setting up different methods of success can, those same budget busters can honestly be flipped around, and you can create small savings plans that are consistent so long as you are continuously making deposits and continuously driving towards your goal. It's definitely achievable, and it honestly doesn't take it. Oftentimes, I think my clients will reach their goal sooner than they expected that they ever could, simply by staying committed to the plan.
Yeah,
it's exciting.
That's great. Yeah, thank you, Raymond. Hey, David, you're still on here. I know you've been listening in. Any wisdom you would add for us?
Yes, I think Raymond provided a lot of really great content. For me, I think, when it comes down to your finances and managing your budget, it's really a mindset, right? And, sometimes dealing with your finances is sometimes it is a fun topic to deal with, and sometimes it isn't. Right now, these are really challenging times. So, it's hard. It's hard to take a look at those things and figure out what you're going to do with your money. But, I think tips like what Raymond just said about setting up transfers that are automatic to where you don't have to even think about it, I think that's a huge tip that a lot of us can benefit from, because, if we rely on ourselves to every single day save money, are we really going to stick to it? Some of us might, but a lot of us probably won't. So when it comes to those types of goals, for me, it's always, start with the end in mind. Where is it that you want to reach? What is that goal that you're trying to reach? And then work your way back from there. So it's not about, seeing what your goal is and just thinking, I can't achieve that. I can't do that. It's more about how can I do that? So when it comes to, your finances, again, I think it's really a mindset shift, and just learning from other people as well, doing your research, but then also talking to other people and seeing what they're doing that's maybe working for them. I think that's also very beneficial to change your mindset and, practice better financial best practices.
Yeah, that's great. And yeah, so again, going back to those goals, like if we have goals we're working toward, makes it much easier to make good financial decisions. By the way, for any of our residents watching, if you'd be interested in having some one-on-one help with this, we do have a financial coaching program. We call it Pathways to Economic Empowerment. If you go on the HOPE website, or if you reach out to your HOPE service coordinator, you can always ask in the property management office to connect with your service coordinator. They can connect you with either Sandra or Heidi, who are our two financial coaches that can help walk through. And we have a great little document that helps you kind of break down what are your goals, short and long term, and then begin to build that budget. So definitely take advantage of that opportunity. Before we wrap up, Dixie's been listening too. Dixie, I want to give you the chance, if you have any thoughts or questions listening to all this from your perspective.
So when I was doing my budget, I, yes, also like the wants and needs. And then when my husband and I were doing our budget together, him identifying some of my wants and needs, like just trying to be in agreement versus wants and needs, and then setting up that goal, realizing, okay, yeah, maybe some of my needs were wants.
I vetted that debate too.
But again, realizing, okay, if this is the goal, then okay, then that's what we're working towards, and then realizing, you know what, yeah, I really didn't need that, or I really wanted that, but it wasn't a need. So setting a goal.
Be honest with yourself.
Agreed.
Yeah. David said it's not always a comfortable conversation to have even with just yourself, let alone a significant other or family member. You're sharing.
저거를 잘못 써가지고 자기가 버린 거래.
그럼 어디 있어?
그러니까 같이 버렸는데.
You are.
내가 제일 걱정하는 게 다 이런 거였어.
Raymond's going to come back and translate for us momentarily.
Oh, I'm sorry.
I'm sorry about that, guys. Okay, so I think it's important to have that conversation with your significant other or with whoever you're going to have it, because a lot of times, like Dixie said, you find out that some of your needs are actually wants, and that can be a difficult pill to swallow sometimes. But you have to keep your eye on the prize. You know what's important for you. You know what it is that you're aspiring to do, and the closer you get to that, the more exciting and the more rush that you get. You know what I mean? Once you get to 25% of your goal, you're halfway to half. And before you know it, you're finished. And I love it. My favorite thing, honestly, is I love it when I have clients come in and they're like, I don't know anything about credit. 6 months later, they come in and they're like, Ray, I just got my second credit card and my credit score is 710. I don't even know what to say. You know what I mean? It's something that is doable, but you have to have these difficult conversations with yourself. I know I'm checking my mobile banking every day, and I don't expect everybody to do it because I know that that's a little overwhelming. But when I share that about myself, the reason that I do it is because how am I going to have the conversation with anybody else? If I'm not having it with myself, at least Monday through Friday when I'm coming in here and speaking to people face to face. So I'm able to just look at it. Some days are more fun than others. I get paid tomorrow, so that's going to be a fun morning. But, other days my rent just came out. Other days my auto loan just came out. Other days I just paid off my credit cards. And, it's not the most exciting to check my online banking, but, it's just about finding that habit, finding those healthy habits for yourself and a consistency, sticking to a plan. Once you've decided what it is that you want, once you've decided how you're going to do it, which I think we're all capable of creating if we just give ourselves a moment, then do it. Nothing's holding you back.
Yeah, it's great. And Dixie, I appreciate you pointing out the difference between wants and needs. And that is a tough conversation sometime. And like you said, there's sometimes a difference of perspective. But yeah, getting honest with ourselves. Is this really a need? Could I live without it? Or is it really something that I wanted? It's a little bit more of a luxury. And then the other theme I've definitely heard today was goals. Raymond, I've never heard anybody say when you get to 25%, that's halfway there. I like that. That's good. Those are good math skills. But it's a good way to look at it too. It's
the truth too.
One step at a time. So, hey, we're gonna wrap it up. But just to say to any of our viewers, feel free to check out our other webinars with different topics that go a little deeper on budgeting and some other topics. If you're looking to rebuild your career, we might have some more coming on that as well. But You can find all of that on our webpage at hthf.org/learn. So again, hthf.org/learn. And next week, for any of you who have kids or teens, we're going to be doing a career panel with a number of different experts on there from different career, different industries. And so to be able to hear from them about what they do and what it looks like could be really interesting, particularly for our kids and our teens. So thanks so much, and everybody take care. Bye-bye.
Thank you so much. Have a good one.
Thank you.